Hi, and welcome to this morning's early global view. It's currently 6:45 a.m. U.S. Central Time on Friday, April 22nd, 2016. And it's very interesting general psychology right now. You can see on the screen we had a sell-off yesterday in the S&P 500, the first real sell-off in a while. And that was in the wake of the ECB's still very accommodative position. And that's important because one of the major themes we've been stressing is that, yes, you can have a bad news is good news rally, especially once the anticipation and fact of the Fed being less hawkish really started to hit from about mid-February. But you also have this overriding concern that the central banks alone and their accommodation are not enough to revive the true strength of the global economy. Now, that's a theme on the lack of structural reform from the political class that will really drive investment and hiring that we've been on for a very long time, and it's starting to gain a lot more traction in official circles. So we have to ask, what has all this meant to the markets? Well, you can see the sell-off from yesterday in the U.S. S&P 500, and currently it's up at 2,085. Now, that's interesting because 2085 is, of course, the top of the combined levels at 2075 to 2085. We stated it as a range for a while, but in fact it is two discrete levels. And along the way at 2078 is the upbreak on the weekly chart out of the major downward channel since last year's high that we will look at in those intermediate charts. And that's an important area, especially later today, as we're going to have a bit of a higher opening today. What becomes very important is last week's close back down at 2075. Why is that? Well, after a minor dip on Monday, market's been higher all week. If it ends up much lower below 2075, not just a couple dollars like 2072 or something like that, but back below that support at 2075 is not only below support, at lower on the week, it will be putting in a weekly chart downside closing price reversal. A new high followed by a lower close that actually would set a topping signal into what should have been an up break area around 2078 on that weekly chart. So it's going to be very important to see what we get there. Now, the other aspect of any further weakness today, prospectively, right now we're up on the day, but if we get weakness, especially below 2075, that's going to drive the 30-minute MACD out below its lower runaway band right away. And if it's maintained at all, it probably puts the hourly MACD below its lower runaway band. And as we know, as we can see here, once the market is out of the bands, like the upper runaway band back here, going back to last Wednesday, it tends to support continued momentum in that direction. And that pretty much does it for the short-term view of the S&P 500.